You applied for a car loan, and the dealership came back with an interest rate that made the monthly payment nearly $400 higher than the person who bought the same car an hour before you. Same car. Same sticker price, same loan term, the same 60 months. The only difference between the two of you was a 3-digit number that neither of you ever sees written on anything you actually sign. Your credit score. You have one whether you think about it or not, whether you have ever checked it or not. Every adult who has ever borrowed $1 sits somewhere on a scale that runs from 300 at the bottom to 850 at the top, and the exact spot you occupy quietly sets the price of nearly everything you will ever finance for the rest of your life. Here is what your life actually costs at every level of that number, and exactly where the one line sits that quietly changes everything about what you pay. Start at the bottom. A credit score of 450. This is not a number you arrive at by accident. It is the result of accounts sent to collections, a bankruptcy sitting on file, or payments missed so consistently that the system has stopped extending you any benefit of the doubt at all. At 450, you are not paying high interest. You are simply being declined. The mortgage application does not come back with a worse rate. It comes back rejected. The car loan requires a cosigner, or it sends you to a buy here, pay here lot, charging 29% on a vehicle that should never have cost that much. The apartment application is turned down, and the landlord is not required to tell you why. At this level, the cost is not measured in interest. It is measured in access and in the deposits that access now demands. You pay cash for a used car because financing is closed to you entirely. You pay a deposit of $300 just to turn the electricity on, because the utility company runs your credit and treats you as a risk to be insured against. You pay another $200 to the cell phone carrier for exactly the same reason. Every routine thing that other people arrange with a single signature, you arrange with a deposit, and those deposits are your money, frozen, sitting in someone else's account, working for the company, and never once for you. The system already has a name for where you are standing, subprime. And the first task in front of you is not optimization or strategy. It is simply to stop the bleeding and climb to the first level where the doors begin to open at all, the level where you stop being declined outright and start merely being overcharged. That level is a credit score of 580. 580. The first doors unlock here, but every one of them opens onto the most expensive room in the building. At 580, you can finally be approved for a mortgage, specifically an FHA loan, which is designed to accept scores this low. You can be approved for a car loan without dragging a cosigner into it. You are no longer declined. You have become something far more profitable to the lender than a declined applicant ever was. You are now an approved high-risk borrower, and high risk is precisely where the largest profits in lending are made. Put the number on it. On a car loan at this level, your annual interest rate runs somewhere around 18 to 20%. On a $30,000 car financed over 6 years, that works out to $18,700 in interest alone, more than half the price of the entire car again, stacked on top of the car. The person with good credit financing the identical vehicle off the same lot pays $2,900 in interest across the same 6 years. The car costs you $15,800 more than it cost them, and it is, down to the paint, exactly the same car. This is the level where most people first understand that the score was never a grade on a report card. It is a price tag the lender reads silently before you have finished walking through the door, and at 580, that price tag is brutal. Your insurance premiums are higher here too, because in most states, the insurer pulls your credit and charges you more simply because the number is low. Every single month you remain at this level, the system quietly extracts its premium from you. The next real threshold, the one where the interest rates abruptly fall by half, sits at 670. 670. This is the line. On one side of it, you are subprime. On the other side, you are prime. And the word the entire industry uses to describe you changes from risk to customer. Crossing 670 is the single most valuable financial move available to most people alive, and it costs nothing but time and consistency, because the instant you cross it, the price of money drops beneath your feet. Here is the change stated in real numbers. That same car loan that cost you 18% at $580 now costs you around 7%. On the identical $30,000 car over the same 6 years, your interest falls from $18,700 to $6,600. Crossing one threshold, a difference of 90 points on a number you cannot even see, saves you $12,100 on a single car. Spread across a lifetime of cars, mortgages, and credit cards, the difference between a subprime file and a prime one adds up to more than $194,000, money that simply stays in your life instead of leaving it. At 670, you also stop paying deposits altogether. The utility connects your power without holding $300 hostage. The landlord approves your application without a second glance. The credit card offers arriving in the mail stop advertising a punishing rate for people rebuilding their credit and start advertising cashback and rewards. Your car insurance drops as well, often by $200 or $300 a year, the moment the insurer pulls the higher number. You have become, in the cold eyes of the system, safe. But 670 is only the floor of prime, not its ceiling, and there is one more level above you where the very best rates in the entire market quietly become available. That level begins at 740. 740. This is where the pricing stops improving in any way you can actually feel. And most people will never have a single reason to climb higher than this. At 740, you qualify for the best advertised rate on essentially everything you might borrow. The mortgage rate the bank prints on its billboard. The 0% financing offer taped to the windshield of the new car. The premium rewards credit card with the airport lounge access. The lowest number in every one of those advertisements is quietly reserved for people sitting at 740 and above, and you have just become one of them. The difference between 670 and 740 is real, but it is far smaller than the enormous leap that came before it. On a $300,000 mortgage, the borrower at 670 might pay an interest rate roughly 0.5% higher than the borrower at 740. 0.5% sounds like nothing at all. Spread across 30 years on that mortgage, it is $31,800. The same house, the same loan. $31,800. Decided entirely by the distance between two numbers. Most people could not tell you about themselves if you asked. This is the level the entire system is quietly steering you toward. Because a borrower at 740 is the most profitable kind of customer of all. Not because they pay the most in interest. Because they borrow the most, reliably, at rates they can always comfortably afford, for decades on end. You are no longer being penalized by the machine. You are being courted by it. And there is still one band above you, where the number keeps climbing but the benefit, for the very first time on this scale, almost completely stops. That band begins at 800. 800. From here, up to the very top of the scale, at 850, you are in what the industry politely calls exceptional credit. And here is the part that nobody bothers to tell you. It is almost completely worthless to be here instead of at 740. The rate you are offered on a mortgage at 810 is, in nearly every single case, identical to the rate offered to the borrower at 740. The lender does not keep a secret tier of money priced lower for the nearly perfect. The best rate is simply the best rate, and you already reached it a full 60 points ago. People chase the climb from 740 up to 850 as though it genuinely matters, refreshing the app on their phone, watching the number tick upward 2 points, then 3, treating it like a video game with a prize waiting at the end of it. There is no prize. The score above 740 is a vanity metric for very nearly every borrowing decision a normal person will ever make. The money you would spend optimizing it, along with the energy and the attention it quietly consumes, returns you nothing at all, because the only door it could unlock is a door you already walked through cleanly. The single exception is the small group of people borrowing genuinely enormous sums, jumbo mortgages on expensive properties, where some lenders do reserve their very sharpest pricing for the highest tier on the scale. For everyone else on Earth, 800 is a number to feel quietly proud of and absolutely nothing more than that, which means the entire game, the part that actually changes your life measured in real dollars, was already played and already won far below the top. At a single threshold, most people pass straight through without ever noticing it happened. That threshold is the one worth understanding completely. The whole scale, 300 at the bottom to 850 at the top, comes down to a small handful of crossings, and very nearly all of the money is decided by just one of them. 3 things you can do this week, wherever you happen to sit on the scale right now. Find your actual score for free, through your own bank or a card issuer that prints it on the monthly statement, and then find the 2 factors dragging it down, because they are listed in plain language right beside it. For most people, those 2 factors are payment history and the percentage of available credit they are using. You cannot move a number you have never once looked at. If you are sitting below 670, treat that one crossing as the only financial goal that matters until the day you reach it, because no investment available to you anywhere returns anything close to the $12,000 that single crossing saves you on one car loan, let alone the $194,000 it saves across a lifetime. Pay every bill on the day it arrives and bring every card balance below 30% of its limit. If you are already above 740, stop optimizing the number entirely. You have already won the only part of this game that ever pays out. Put that energy somewhere it can actually earn you a return, because the score above this point never will. You applied for a car loan and paid nearly $400 a month more than the person an hour ahead of you for the very same car because of a number you had simply never checked. Somewhere right now, someone is signing that exact loan, quietly proud that they were approved at all, never once told that the approval itself was the most expensive word in the entire room.